stocks in the news. We got a lot of earnings, a lot of interesting price action. This was like the first day in earnings season that we got that surge of cross-sector, larger companies across numerous sectors on one day, right? On one day, it's kind of like one could look at the official start of earnings season, if you would. Lots of companies to choose from. Matt, where are you going to start?
No, in from JP Morgan till today, it's been an interesting earnings season so far. It's not abnormal, but it has been interesting in the sense that I have not felt like we've been in earnings
No,
season.
this is the official.
Yeah, I feel like there's still a lot of trades to be had. There's still a lot of time in front of us, but now you don't have time. Now you're right in front
Every
of
day,
a lot.
tons of companies.
Oh man, like just in looking at earnings here, here's a list of all the companies that reported here today. So we're looking at FinViz here, guys, and we're just going to go to the S&P 500. All right. So earnings date here. Let's go today before the market open and yesterday after the market close. And to overview here, let's make sure we're listed from a specific billions. Let's categorize that market cap there. All right, we got 29 S&P 500 companies reporting earnings here today. Just today, in terms of plus mid-cap companies, we have 62 mid-cap, $2 billion or above companies that are reporting earnings today. Now, when you are looking at the overall marketplace, obviously, some days I look at this and I'm like, okay, what earnings are the most important ones? Which ones do we want to talk about? Which ones are the ones that are going to move the market? And sometimes I don't cover, well, not sometimes, I don't cover all the earnings reports, obviously. I look at kind of the major movers. I look at the stocks that are the most important to their spaces. And those are the ones we talk about in earnings roundup. Now, there's 9 stocks in the news here today from an earnings perspective. And what I'm going to be doing as we do navigate earnings season here, guys, is I'm going to basically look at when we have days like today where there's a lot of earnings reports, we're going to look at kind of bunches together. We're going to look at three stocks, that type of thing, so we can be a little bit more efficient. The first 3 stocks we're going to talk about from an earnings perspective are GE, Lockheed Martin, and General Motors. Now, when you're looking at GE here, guys, first and foremost, GE came in with a really good beat. It came in with a 23% beat against expectation. Revenue also beat with the 8% year over year. They also increased forward-looking guidance by 4%. That is what we call a hat trick. GE pulls off a hat trick with good beat on EPS, good beat on the revenue, and they did increase forward-looking guidance.
Not the first hat trick this year, if I remember right. Right? They pulled one off last quarter, didn't they?
They did pull off one last quarter as well. GE Aerospace, I like this company. I'd like GE now. I used to never like GE, ever. If you guys remember, Coach Tim back in the day hated GE. But after GE started splitting off GE Healthcare, GE Aerospace, I started liking GE a lot more once they started segmenting some of their segments. So GE comes in with a hat trick. Lockheed Martin, they come in with a beat against EPS. They also beat against the revenue expectation, and they increase EPS guidance by 1.7% as well. That's a little bit of a mini hat trick. I'd say GE a little bit better than Lockheed Martin, but a good beat out of Lockheed Martin as well. General Motors, that's the Tackle 25 General Motors. They come in at $3. Expectation was $2.67. That's a 15% beat against EPS. Revenue also topped, very good revenue top. They increased EPS guidance by a whopping 5%, Mark. In a world where we're having macro conversations, I'm looking at these earnings results coming out of GE, Lockheed Martin, and General Motors, and I got beats across the board. I got increases in guidance across the board. All 3 of them look fairly decent from a raw numbers perspective. Now, when you are looking at them from a pure technical perspective, we're going to look at these just one by one. And guys, here's the game. Out of just these 3 stocks, which one are you going to add to a watch list to track the secondary pattern for either a swing trade or a position trade? That's the game here. Okay, that's the game. We'll take a look at GM because they obviously went down on the day, but they did have a good earnings report. Now, in terms of the game, let's go ahead and look at GE. GE Aerospace here. GE Aerospace, once again, pulled off the hat trick. They gapped up and ran away from the gap. Now, I don't see this necessarily as a gap situation, but if you were to categorize the gap on GE, you would categorize the gap as a breakaway gap, as it is breaking out of neutrality and it's running away from the gap out. So either runaway, breakaway, both look pretty good. Both would look for further upward movement in price. You got to like the technical price action of GE, and you got to like the fundamental condition. And it does not hurt that GE went through 3 months of consolidation.
Yeah, it never hurts.
Earnings results to this earnings result, because now we're breaking out of the daily
second quarter. This would be the left behind, even though it was previous. Like, you know, we're categorizing left behind as anything that didn't anything that did not participate in the second quarter
to quarter, because that's kind of what we're seeing over the last 6 months.
That's been the general rhythm, right?
So GE looks to be firing off here. I certainly believe it justifies getting on a secondary a watch list for secondary patterns. Now, secondary patterns here, guys. High base makes sense. A flag would be beautiful. Inside flag would be beautiful there. Let's take a look at Lockheed Martin. As Lockheed Martin also pulls off the hat trick, they gap out and run away from the gap. Now, difference, small, doesn't really mean much, but it's for a technician like me, guys. I like being accurate on technical labeling of patterns. I just do. And when you're looking at the gap here, the difference is you had a little bit of a trend that broke out of the overhead before the earnings, which puts this as a runaway gap situation. You'd be looking at momentum patterns because of the runaway gap situation. We obviously know they have an earnings result that we do like. Now, the reason I would put it on a momentum pattern instead of some degree of retracement here is because of the overhead of Lockheed Martin. You gapped and ran right into some significant overhead right around that $500 mark. I don't think it takes a genius here to say, give me something around that $500 level. Lockheed looks good. GE Aerospace looks good. Personally, my personal take on that, I like GE Aerospace a little bit more than the Lockheed Martin analysis, but they are fairly similar to one another. And then General Motors, unfortunately, just did not pick up at all. The other two gapped up a little bit on the raw numbers. GM did not. They started selling initially, and they sold pretty aggressively throughout the day. My take on GM here, GM's a great covered call stock. You're going to continue to write those covered calls, but I don't think this is a bad report. It's just you don't want to catch that falling knife, and you don't want to be a fighter in the battle of trying to create support. So put it on a watch list. I do like the 46 number. I would love to see some degree of consolidation around that 46 number. On the first three, guys, you can only pick one. GM to wait on a 46 reversal, Lockheed to get it on a momentum trigger above 500 with momentum analysis, or GE on the multiple time frame analysis. Which one's your pick? It's GE for me too.